Thank you, Mr. Chairman. Chair Powell, it's good seeing you again. I want to start with just a broad-based conversation. I know the Fed has been making adjustments to the Fed funds rate over the last several months, and what we've noticed is there's not been a lot of, although there's been movement on short-term rates, there really has been minimal impact on, in my view, intermediate to long-term rates. Can you expound on why you think this phenomena is starting to exist with respect to Fed rate monetary policy versus the general borrowing rates for businesses and consumers?
Right. So you're right. Of course, we've lowered the federal funds rate, and as sometimes happens, longer rates have gone up. They've gone up and come down and gone back up. They moved around, but they're higher. And the reason is that we don't control long-term rates. They react to a whole bunch of different things, including a sense of more deficit spending coming, including expectations of more growth and of risk of higher inflation, but not. So markets aren't pricing in higher inflation, but maybe pricing in a little, that the risk of that is there, and that could be a reaction to new policies or not. But ultimately, though, what the increase in longer-term rates is really mostly not about Fed policy or our job of maintaining price stability. It's about other things, the term premium in particular. Be happy to meet with you, and go through this in a lot of detail, more than you can do here.
No, I would love to do that. One of the concerns I have, as well as a lot of my colleagues up here on the Hill, is there is but so much that the Fed can do with respect to rate policy, and I fully acknowledge that. Wanted to get your views on that, but I think it's also the desire, and this conversation happening right now, obviously with with Doge and Elon Musk, and the desires for efficiencies, but then also stability in federal spending and even bending the cost curve. Fiscal policy from Capitol Hill, do you think that would yield positive results in medium and long-term rates, borrowing rates, not just for the federal government, but for the American consumer?
When you say fiscal policy, you mean fiscal policy that would reduce deficits over time?
Yes, fiscal policy that will reduce deficits, fiscal restraint, I would say fiscal common sense over the intermediate and long term for the United States.
Yes, well, so I think part of what market participants think about when they buy our treasuries is how much more of this is coming. Are we going to get on a sustainable path? And they want to get paid. If the answer to that is, wow, we don't have a lot of confidence in that, then they're going to need, so the term premium, the so-called term premium, goes up for that reason. And there's no question if we were on a more sustainable path, I do think rates would be lower.
No, and I appreciate that testimony, because one of the things that, while we do talk about obviously tax policy in another committee, regulatory policy throughout the entire federal government, I think it's important for the American people to know that Washington does have to be fiscally responsible. And if we are not, and I say all of Washington, if we are not, then the risk premium, so to speak, for borrowings in the marketplace are going to increase, not because of the American consumer, not because of the strength of the American engine, but simply because the amount of treasuries that we are putting out to market are just demanding a higher premium for every new dollar that we borrow, because simply people want to be paid back. And it's just something where, Chairman, you don't have to comment on that. It's something I think is important for the American people to understand. That is the major issue, if you will, over the next 20 years, 10 to 20 years for the federal government, that we have to get our fiscal house in order if we're going to give the American consumer, who might be poor, trying to make a way in this country, middle income, trying to just take care of their children and figure out what the next stage in life is going to look like. People who are in the upper middle class, who are now forming businesses, building some real wealth for themselves and for their family, all of that is at risk if the United States government does not take its fiscal health as serious as any other family and any other business would do. Real quick, Chairman, you said yesterday that as long as you're chairman, the U.S. will never have a central bank digital currency. Is the Federal Reserve or any of its member banks currently conducting any studies on CBDCs, either for retail or wholesale purposes?
I mean, we're not doing any work that is designed to lead to a retail CBDC. That's not happening. When we don't support one, we don't have legal authority to do one. So no, the notion of a wholesale CBDC is really not one that we think about or accept. We have take FedWire. FedWire is a real-time, digital process of trillions of dollars every day between banks. Is that a CBDC? Some people would say that's.
Gentleman's time has expired.
So
Thank you, Chairman.
Thank
I
you.
yield back. Thank you, Chairman.